right, so boom. If you fail to plan, you can plan to fail. If you're watching this on YouTube, go ahead and hit subscribe and like real quick for me so you can keep getting all this awesome content. I give a bunch of free stuff here, enough to get you making some money that you can pay for my paid stuff. All right. So if you fail to plan, you can plan to fail. Us pit bulls, what we say is, trade the plan to trade the plan. All right. So step one, you got to define your purpose and your goals. If your purpose is an income, is your purpose a side hustle? Is your purpose buying a house? Is your purpose just to learn? A lot of people just get into this to learn their first year, and then after that, they're going to develop bigger financial goals. So, like my purpose personally is just making more and teaching because I'm already financially set from trading. So I do have financial goals, but my main purpose of doing this is to spread that knowledge and to set my kids up for no cares in the world as they grow. So defining my purpose and goals. So why are you trading? What brought you to this place? And then based on that purpose, you're going to establish your goals. So if your purpose is just learning, then your goal is probably going to be modest. If you break even for the first 6 months, it's great because you're going to learn a ton by doing that. You won't have lost anything. It's cheaper than a college education, right? So if your purpose is income, or maybe your purpose is getting rich and building wealth, maybe your purpose is who knows, but establish what it is and then establish your goal based on that purpose. So take mine, for example. I'm happy 52 weeks. If I make 10,000 a week, it's $500,000. Ain't nowhere near that after taxes, so don't get too excited. But I'm happy there. So 52 weeks will put at 2,000 a week, and then I would divide that goal by 5 to get my daily goal. But then you want that just so you can have it in the back of your head, but at the same time you're not going to be too focused on the daily, because one day you might be down 2,000, the next day you might be up 3,000, and the next day you might be up 5,000, the next day you might be down 6,000, the next day you might be up 1,000, and then for the week you're plus 1,000, and that may be a good week for you. So it really just depends on you and your goals, your purpose. Okay. So remember that options trading does involve high risk, and it does involve big swings. So like I have my best days after my worst days, and I have my worst days after my best days off. And the same goes for weekly and monthly. That's just how it is. So yeah, if you get double your goal returns for 1 week and then you take a loss the next, it's okay as long as your average return is in line with your goals. You want to keep checking that your average is in line with your goals. Every week, every month, just keep watching that number. All right. From there, you got to assess your risk. So determine what you're willing to lose or give up while striving to hit your big goal. Establish a budget for each day and each trade. Personally, I try and trade 1 to 2% of my portfolio on each trade. So if I'm working, I usually work with $100,000 portfolio. Anything that goes over that, I just dump into my savings, which is in stocks and just builds over time. I don't have to pay any attention to it. But for my options trading, I have 100,000 allocated to my personal income options trading account. So I have 4 different options trading accounts based on what they're for. But for my personal income account, I have 100,000 there. And my budget for each trade, I like to keep it around $1,000 to $2,000. Now, I have $20,000 in CCIV right now because it's a huge opportunity. Hopefully it doesn't crash and burn, but it looks like a huge opportunity to me, and I'm pretty excited about it. So I'm breaking my trade plan a little bit there, but it's okay because I have that to lose and my risk tolerance is very high. And it's also part of my trade plan to make exceptions like that. It's just usually 99% of my trades I'm going to keep to 1 to 2% of my cash on hand to allocate to actually trading. Okay. So you have to figure out that number for yourself though. Figure out what you have to commit to it. And how much, and then also how much can you invest in learning this? Are you going to invest in a 4-year institution in a college and go to school for this? Are you going to invest in the free knowledge on YouTube or my free Facebook group? Or are you going to invest in some alert services or maybe some education services? I'm building a course right now. I'm going to build a free one. It'll get you started and help you make enough money to pay for the paid one. All right. So, but how much, it's got to be part of your plan, So what's your total financial commitment? Boom. I also have a cheat sheet I'll go over with you that goes with this. All right. From there, determine how much time you can allocate to trading and learning, because this is going to help you develop your strategy. If you only have, 2 hours a week to give to trading and learning, you're going to follow a much different strategy than somebody who's spending 20, 40, 60 hours a week doing this, right? And so come up with your total weekly hourly commitment. Based on that, then you're going to build your strategy, according to your goals, your time, and your risk tolerance. So if you want some real low risk, slower gains, I recommend I don't recommend, I can't make recommendations, but what I do for my low risk, slow gain retirement profile is what I have this going as. I have high dividend stock holds, so some real estate investments, also smart portfolio stock trading. So reoccurring investments, dollar cost averaging, and great companies that are going up. My low risk, slow gain portfolio is actually up 60% last year. So it was actually very fast gains, coincidentally, just because the year we had a lot of opportunities with your dollar cost averaging there. Also just doing swing trades with stocks. So, buying Tesla on the dips and selling it on the peaks is good. Instead of using options where you can lose it all if you don't hit it at a certain time frame. Tesla's going up at some point in time. So you can also sell puts. So I prefer, if I'm going to buy a stock, if I'm going to buy Tesla, I'd rather sell a put for Tesla, and just continually make money on my buy order until it gets picked up. That leads you into an options wheel if you want, which will lead you into holding the stock and then selling covered calls. Okay, so I have another video on options wheel and exactly how to do that. Medium risk, more of a steady gain strategy where you could lose a lot, you could gain a lot, but if you're consistent over time, follow your plan, it should lead to steady gains. What you can do with some longer term call spreads, swing trading calls and puts, some longer time. Using calls to leverage your investment, as opposed to selling a put, or you could do both of these actually. So let's say you want to buy Tesla at $800, you could sell a put at $800, but Tesla's $850 right now. You don't want to miss out if it goes too high, so you could sell a put at $800 and buy a call at $900 instead of actually buying the stock. I forgot where I was. Anyways, this is a way that you can leverage calls and puts as investments, and also spreads are a little bit less risk because you're not going to be paying as much upfront for the initial contract because you're selling one as well. All right, so then high risk, big rewards. This is a lot of stuff you see me doing with day trades and swing trades. So my spreads and my longer term stuff, I just have an account that I said I don't check it as much. That would be a great strategy if you only have a couple hours a week to dedicate to it. And then I high risk, high reward, so you can very easily lose it all here. But doing like weeklies, buying calls and puts, day trading based on momentum and swings, swing trades, calls, puts, and spreads. They can get pretty risky, but you can also get a lot of bang for your buck there. So based on everything you develop here, then you got to pick your passion. So based on your goal, your strategy, and your risk tolerance, you're going to decide on a strategy to find the quality stock and option play. So it may be subscribing to my alert service. It may be running a scanner that you develop or that you like. If you find out that every time you're making money, you're going to want to track your trades and watch your trades and see how it's happening. If you find out that every time you're making money, it's on a stock that's between $10 and $20 on a monthly call that you get on the money, and you've done your due diligence on or something like that, then that's your sweet spot. That's where you want to put all your attention at. You don't want to go chasing Tesla and chasing Fiverr. You want to be looking at Ford and Zynga and running your scans. And this also help you set up your own personal scanner too to find these stocks. So based on your goal and your strategy and your risk tolerance, that's how you decide on what plays to make. That's why I can't give advice and tell you what plays to make, because I don't know all that and I don't have time to figure it all out for you. So I'm going to empower you to figure it out yourself. So I got a worksheet to go along with this step-by-step guide that's going to help you come up with your own strategy that's really going to help you out. Like I said, I'm not a financial advisor. It's not financial advice. I just made it work. It works for me. I believe it'll work for you too. So if you want what I got, do what I did, and I will get to that worksheet next. Peace.